We're going to get the border back open. It's just going to have to be later. Good afternoon, everyone. Welcome back to the CommStock channel. I am Relph with CommStock Investments. Going to take a look at what's been going on in the cattle market this week, some of the influencing factors and what we can expect or maybe expect moving forward here. Taking a look first at what the market has done. We'll see what these movements have been over the last few days, specifically Wednesday, Thursday, and today have been quite notable in several of these cattle contracts. Starting first with the November feeder cattle, you can see locked down the 925 limit here as we're coming into the last hour and a half of trading in the cattle. This is the second day this week that we've seen all deferred feeders down the limit. The only one that is not down the limit right now is October. It has touched limit lower, but can't stay there because it is tied to cash. And so you're seeing a little bit of reprieve in the October contract. But on this November, just this week, from the time we started the week till now, we've dropped the market $19.50. And really all of that loss has come in the last 3 days. The limit lower move on Wednesday, then we saw about a 275 follow through yesterday, another limit move today. We have taken out longer term trend line support. We have taken out some short-term retracement levels that were providing some support. Now we have a couple of consolidative lows nearby that might hold the market. In the November contract, 349.12 was the low on September 26th. That's something that could hold this. And then you go back to the September 17th low at 342.12. So in that 42 to 49 range, there are a couple of stopping points that might hold the market. But if they continue throwing darts at this market like they have been, I'm not sure anything's going to prevent this collapse. Cash is starting to break in the barns as well, hearing a lot of categorically $20 to $30 lower feeder cattle cash out in the country, especially since the fallout on Wednesday, which there have been some major sales since Wednesday. Live cattle, a similar looking story. We've taken out the short-term trend line support, huge limit down move today after a big move lower on Wednesday. In the December contract, we did finish positive yesterday, but negligibly. That was not the case in several of the deferred contracts, and now everything is locked limit lower. And it's going to be the same type of analysis. You can go look for this September 30th low at 231.75 to potentially hold. That's going to be about $1.20 below current trading. Otherwise, you go back to the September 10th low at 230.07, so almost $4 lower than our current levels. If those get taken out, at least in the case of the live cattle, you do have the 100-day moving average that might be a stopping point at 228, so not overly far away at this point, considering the fall off that we've seen. What's been going on that's causing this huge collapse that we're seeing in the futures market? Well, most of you that are watching this are watching because you're interested or involved in the industry, and you're probably keeping up with some of this. The first thing we heard was late last week that there was rumors we might be buying Argentine beef as a way to reduce beef prices, but we hadn't heard any confirmation of that until we fast forward to Sunday, when late Sunday we heard that Trump had made the announcement on Air Force One to the press corps that was traveling with him that we could buy some Argentine beef and that would help lower our prices. That gave an overall negative undertone to the market, and we saw just a general sentiment shift to where it was like, okay, we need to be looking for rallies to sell, or in the case of a producer background or a feeder, we need to be hedging off some of this risk because there are a lot of variables here in what this could mean. Are they going to lift tariffs on Brazil? Are they going to buy Argentine beef? Are they going to open the Mexican border? Well, the Argentine beef was obviously confirmed on Sunday, and then they sent out some quotas of what they're going to do, and then opening up some BLM ground and possibly breaking out some CRP ground as additional range ground moving forward. That could have a positive influence, and I think the industry welcomes that possibility. However, then fast forward to what caused the limit lower move on Wednesday was the True Social post from President Trump. And I think everybody's probably read this if you're around it. But to summarize, in my opinion, it was basically the only reason you have a good market is because of me and you're too stupid to know any better. This did not sit well with the industry. This made some enemies out of a lot of people within the industry. And now it's going to be a matter of what kind of recovery can we see moving forward. So moving from Wednesday to Thursday, we saw word that the Mexican ag minister was going to be traveling to Washington to discuss reopening the border for cattle imports into the U.S. And this is something that we had heard rumblings of about a month and a half ago, that By November, we hope to have the border open. This was coming from what they kept calling the NCBA president equivalent in Mexico, stating that we're going to get the border back open. It's just going to have to be later, hopefully targeting sometime in November. Well, here we are, Mexican Ag Minister coming to Washington, and we're talking about trying to open the border and what steps can be taken to do that. And trying to think through that process, it's like, okay, what could be the trigger that would make it any different now than the last time we were all worried about there being a confirmed case of New World screwworm 70 miles from the U.S. border? And one of the things we can point to is the potential of lower temperatures decreasing the risk of the spread of screwworm and the vulnerability of it. So this information was put together by Brian Grady, who does our livestock and grain analysis. He did a really good job of picking out some of the key points to look for from a temperature standpoint. So the adult screwworm fly activity is very limited when the temperature drops below 59 degrees. Larvae are vulnerable when the soil temperatures drop below 46. Looking at average temperatures for the month of November in South Central Texas, we do fall below that 59-degree threshold on average. So that should be a slowing factor moving through the next 30 days here. And then fast forward to December, we actually have trouble sustaining lows above 50 degrees through the month of December in the same areas of South Central Texas. From the initial onset of the New World screwworm scare and when could we expect a border reopening, I kept thinking if we get to colder temperatures, then that may stop the potential of this thing spreading and maybe actually kill it off naturally through obviously lower temperatures that kill flies. We've all seen it with house flies and around the feedlots and stuff. So maybe they are gearing that direction, and maybe that'll be one of the triggers they use. I do believe the industry is going to be more receptive to opening the Mexican border than they are going to be of importing foreign beef. I feel that way because the U.S. cattle industry can still benefit from the Mexican cattle coming in. We can still background these animals. We can still feed out these animals, and certainly we can process and consume a lot of these animals. So I think this will be better received from the industry. I just don't know if they're going to throw up the national security risk flag and keep this from happening yet again. Still a lot to play out here. And of course, nobody knows exactly what direction we're going. And so we'll have to just kind of wait in the wings and see if anything actually develops here and if we get any confirmation of firm stance on this Mexican border. But today's limit lower move is the risk of the Mexican border reopening and those cattle coming into the country. That's what's causing it this time around. It seems like every dart getting thrown at this is just seeing a knee-jerk reaction, the market showing some serious vulnerability to whatever headlines come out, especially on the negative side. So thanks for joining me this afternoon. On behalf of producer Breanne Jenkins, I'm Eric Relph. We'll see you next time right here on the CommStock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.